horrific sell-off on Wall Street, ladies and gentlemen. Today, it's Wednesday, February 21st, 2023, and we saw the Dow Jones Industrial Average down almost 700 points. Almost 90% of the entire S&P 500 was down. The VIX has topped the 23. Things are looking dire. They're not looking good, but we're here to break it down for you in this special report, Markets in Turmoil. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. And Toby, you and I have been talking nonstop. We weren't even scheduled to do this show today. We knew that we had to do something. This is the biggest sell-off, biggest selling day of the year so far. So we knew we had to do something to help the audience. But I have to say, we've been talking about things being bad. January, we saw actually things quite good, and we had strategists on this show that talked about that this was going to be a great year. What gives, though, Toby? We had some selling last week, and now we're seeing it today. Yeah. What do you think?
Well, I mean, again, let's put this in context, okay? So we come into the end of the year. We have a horrible year last year for many people who were not following Transformity research, of course, since we were up 78%.
Nice.
And we got into January, and just like J.C. Peretz, and just like our friend from the the almanac.
Sam?
Yeah.
Oh, Jeffrey Hirsch, Sam Stovall, all of them.
People had sold a lot of stuff, meant they had a lot of cash. The technical term is oversold. I mean, there was nobody left to sell anything, right? Because of tax loss selling. And we got into, we got the 5-day Santa rally, like Mr. Hirsch said, and then we got the first, 5 or 8 trading days of January up. And the algorithms, remember, yesterday, the entire trading of the New York Stock Exchange was about 82% robotic. In other words, computer driven, right? So oversold. And then people are like, I don't know, it's like sniffing glue or something that, when the Fed would come out and say, Jim Bullard, for instance, from the St. Louis Fed, comes out and says, read my lips, look at my eyes. The only way we would get 6 and 7 and 8 and then 9% inflation down to the 2% target, which, by the way, as I've said forever, they're in a box. They can't just change the field goal, the goalposts here and say,
right.
Oh, did we say 2%? We meant 3%. They can't do that because the bond market then shits the bed. That's a technical term. And when the bond market shits the bed, that means interest rates go significantly higher. People are selling bonds. And then you actually do get the recession because rates, go crazy. So they can't lose control. They got to keep control of this. So blah, blah, blah. We have this, and we hit all the, check boxes for a, trash is cash or cash to trash rally.
Yeah.
Okay. Then for some reason, matter of fact, David Kelly, I love it, at JP Morgan Asset Management, he uses the term, this is just another leg in the perfect weirdness post-pandemic world. And I love that because there's nothing here. I had a list here. I mean, there's nothing here in the last 18 months that's ever happened before. We're in completely different, new territory. And so, the technicals is the only thing anybody's been following because it's the only thing that, work when we got a broad rally and certain, strength measurements hit certain numbers, and Chris Rowe had those, and J.C. Peretz. The algos are buying this stuff. They don't care whether the Fed has to raise rates above 6% to actually do anything against this inflation. But finally, now we have the new idea. It's remember it was hard landing? No, it's going to be a soft landing. Now we have the no landing scenario. And the no landing scenario is, you know what? What happens if, we had 500,000 jobs created in January? Oh, actually, we had 517,000 jobs created. What happens if interest rates have not slowed down anything, and we're not at a point, other than in housing, that the economy has any chance of coming down, which means that we have no chance of bringing inflation down to 2%. Until we, amp up the medicine. If the patient's not taking it with 2 doses, then, you got to give them 4 doses, right? And the narrative just shift like that, Todd. I don't think I've ever quite seen it like that.
Yeah.
For 3 weeks, it was we're going to cut. The Fed's going to end in March, maybe June at the latest. They're going to start cutting in September, October. And so we need to pre-anticipate this and be long. And then, of course, so by the way, Tesla runs 65% in 6 weeks. Boy, am I pissed I didn't have any options on that one. You know, I mean, all the stuff that was cratered came back. Well, that's the classic, you know, dash for trash. And boom, and then FOMO hits. Now all of a sudden, you know, the market's up 7% in January, and if you're a investment manager and you're not up 7% or you're flat, and now you're all right, I can't take the pain any longer. So they're just buying. All right, tell me what the 10 stocks that went up the most. Buy those for me now, which then becomes this feedback loop, right? So all of a sudden, it just gets me. Just all of a sudden, people are, well, you know, with that 517,000 jobs, and then the hot inflation report, and then the crappy numbers out of Home Depot and other. Maybe they're going to have to raise rates.
Right. And here's the thing: when we had the show with Jeffrey Hirsch and Sam Stovall, and we were celebrating that they had nailed their forecast with the January barometer. They had the trifecta. Everything's looking bullish. And I brought up on the show, it just seems too easy. It just can't be that easy. And here you had the Fed meet, and it was almost like they were kind of swayed with public opinion, thinking, oh yeah, we're just going to do the 25 basis points. Here you have Goldman Sachs today coming out saying, yeah, they're going to hike 25 basis points at the next meeting in March, but they're also looking at 2 more 25 basis point hikes. Yeah. You're looking at 75 total. And then they came out and said there will not be a rate cut in 2024. And I think you nailed it, Toby, when you talked about how does anyone possibly believe that there will be a rate cut at the end of this year? It's almost irresponsible for anybody who is a Wall Street professional to come out and simply forecast something without really having any clear evidence. And you are right. There's no historical data here for any of us to prove that the thesis is going to come true.
Yeah, I'm calling it the Rodney Dangerfield. For those of you in the audience who don't remember Rodney Dangerfield, he's a guy who, Caddyshack and his eyes both. He says, I'll tell you, I get no respect at all. Right? Particularly Bullard, who's a hawk on the Fed side, who's a realist. I would call him a realist, and probably a historian. That seems like the other guys, seem to have missed the early 80s and the late 70s.
Yeah.
My Lord, I was looking at this list, Todd. David Kelly, I love to say the legacy of weirdness, and he's right. I mean, well, first off, we have many millions die, disabled, quit the workforce. That hadn't happened since World War II. Had the largest military invasion of a European nation since, World War II.
Right.
We got Russian supply lines. You got 568 million, Europeans afraid they're going to freeze to death. So we buy every LNG, tanker they can possibly get and rent and so on and so forth. And then they get a mild winter, right? China closes its economy down. The 15 largest cities. No one's ever done that before. No one's just, it's like no one closes a city. This is like Seinfeld. Nobody does that.
Yeah.
Nobody does that. And then, boom, we dumped $26 trillion.
Yeah.
European euros, dollars, marks, into the economy. And what did, and Larry Summers was absolutely right. The famed economist, the Nobel Prize winner, maybe he's smart after all. When he was one of the only guys saying, hey guys, you can't do that. You're going to get, historic inflation by putting historic cash money into the system. It's got to go somewhere. And boom, it went into stocks and went into meme stocks. It went into crypto. That's got to come down. Then we have this, the Fed is actually stimulating our economy until June of last year. That's only when they stopped.
Right.
So now you got trillions. If you look at the charts today from the World Bank, there's, we put 26 trillion in. Guess what's happening? We're starting to take 26 trillion out. It's called liquidity. And stock markets do not like it when cash money is going out of the market. So, you add it all up and then the no landing. I just love it. hang on, let me.
Yeah, you're right.
Uh, did you think about that? I mean,
Right.
you yelled and screamed that the Fed was, crushing America, and we haven't lost jobs. We made 4 million jobs.
Yeah.
I mean, it is weird, but it was just weird to me that just, many people disregard the Fed and Jay Powell, by the way, as I've said many times, a history major in college, who started the same time I started in 1980-81, remembers what it was like to have 14% inflation. He remembers what it was like, to have prices go up every day. It was before you had digital pricing. The people had to go. I worked in a supermarket. You had to go to the supermarket, change the price on the little thing on the front of it. I mean, we wouldn't put prices on food because it was going to change, the next week. So this is weirdness. And what was really weird was that somehow people talked themselves into this idea. And then the algos, remember, as soon as, we hit all like the first 5 days, and all the algorithmic traders all were running on the Hirsch's program. And historically, the market doesn't bottom until the Fed stops raising. Now, all of a sudden, we're going to have a big rally and change that history. It's never in these it's never been different. The market stops when they see the whites of the eyes of the Fed stopping. And why people thought it was different is, I just think it's naivete. It's a bunch of FOMO, YOLO, HOMO, ROMO, traders. Yeah. And so what's going to happen? What happens? We're going to retest the support that we had in the S&P 500. Mm-hmm. And if you listen to Mike Wilson at JP Morgan, he says we're back to 3,200. Well, I don't know if I can go that way, but I can certainly, prophesize that we're going to retest those bottoms, certainly. And then when we get to 6% or darn near to it, 5.75 to 6%, then the yelling and screaming is really good. The whale is going to hit, WAIL, whale. And, housing sales, well, that's 14% of the, GDP. But it's the only way you get service inflation down. Yeah. Service wages are up 9.5% year over year. Here in Scottsdale, which is significantly warmer than Buffalo, but yet again, Todd, every place else in the world is too warmer than Buffalo.
Right. True. So true.
Yeah. We went from the average wage of $14 for some of the service workers to now $21.
Yeah.
Now, I don't know if you knew that math, but multiply that out, and what happens to the food prices, man? My little favorite, place across the street down here, all of a sudden, the sandwich that I love to get for $8 is now $12. Blah, blah, blah. So we have to take the pain. The Fed knows what they have to do. You as investors have to expect that they're going to keep raising until we actually get inflation below at least 4%. And that's not going to happen because the way we figure CPI and PCE inflation rates, it is year over year. So it's not even until October, that shelter prices could come down, etc. Right. So I'll stop now.
No, but the biggest thing that I thought was confusing was the Wall Street Financial Press today was actually trying to they were digging deep to try to find a reason for this sell-off. Yeah. I mean, they really were. And they came out and said it was because of Walmart's earnings, which is a load of crap, because that's not the case. I mean, you can look at so many other factors right now, but it's not just one earnings report from a retailer, which did last year report it better, and in the consumer discretionary space, better than its competitors. But here, now this one came out, and then their forward guidance for Walmart, they came right out and said, we just don't know. It's a coin flip as far as what's going to happen with the consumer because of what you just said. 517,000 jobs were created in the month of January is insane, especially in a recessionary environment that we are supposed to be in. Yeah. And it's just not happening. So
that's what I say. It's weird, Todd. It's just everything is so weird that you sort of put your finger in the wind. But the things you can count on, I mean, Home Depot also had bad numbers. But, the other thing I didn't even add in my list, I'm going to add to number 11. The pandemic weirdness is really the weirdest part is the pull forward. So I'm, Amazon, and I hire 200,000 people.
Right.
And I can, and I'm paying them $24 plus, so on and so forth. Look at every of the big tech companies hired over a 250,000 people. And now, guess what? They're getting rid of a 250,000 people, as if the pandemic was going to last for the next 10 years. I mean, we did know that a pandemic with a vaccine was ultimately, going to peter out. That was weird. And so now we're a 76% service economy. And service prices are and shelter prices are, shelter's 27%, services is another 18% of CPI. Mm-hmm. Just doing the math, there's no way that CPI or PCE was what the personal consumption index that the Fed used. There's no way they could come down till October. So why would you do that? And then the other thing is, historically, as I said, stock markets that come down because of a rate hike cycle bottom when the rate hike cycle is done. They raise the flag and they say, we're done.
Yeah.
And we're going to watch and see what happens.
Yeah.
And we're not close.
Yeah, no doubt about that. That's for sure. Listen, let's leave it there on this block, because when we come back after the break, we're going to talk to the audience real directly. We have to be very specific about this, Toby, because they're going to want to know. We just had some selling to happen on Thursday. Friday, we had some pressure. And then obviously today, I opened the show saying today was Wednesday. It's actually Tuesday, February 21st. I'm so confused. I'm already a day ahead. So I'm very nervous about tomorrow already. So we'll have to see what happens. But listen, please stay with us. Thanks for tuning in to Buy, Hold, Sell. We'll be right back after the break.
Buy, Hold, Sell Live, brought to you by Transformity Research. Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
Welcome back to Buy, Hold, Sell Special Report, Markets in Turmoil. I am your trader, Todd Schoenberger, joined by my friend and co-host, Tobin Smith. And Toby, we were just talking in the last block about why we likely had this sell-off today. The question remains is, what should we expect the rest of the way going forward? You brought up Mike Wilson. He's a strategist who came right out, and his quote was, equities are very poor. This is not a good time to be investing in equities. And with that type of logic, we wonder where this guy was a couple of weeks ago. But now we have to only suspect they're going to have the more selling pressure going forward.
You got to give Mike, though, the credit. Both he and I, but he was before me, was talking about the bear market of 2022. He called the bear market in 2021. We called the market when we actually saw that the Fed had no choice. But so anyway, first up, I always like to follow the guy or woman who was right. I think the stupidest thing I ever seen on Wall Street is someone's dead wrong year after year after year after year, and I'm following Tom Dulwitz, right? And why would the Fed? I mean, I'm going to use the example of a couple who wants to get pregnant. Well, the Fed knows what they have to do. They know how to do it. But, does a couple quit having sex after like the first time? You keep going until
you keep going. You got to keep trying until it happens.
Yeah, until the rabbit's dead. Okay.
Yeah.
So the Fed is in that same situation, and I say that's the Rodney Dangerfield thing. Bullard comes out and says, "How can I, with a straight face, answer the question you is asking is how far we're going to go, and not answer the truth, which is we're going to have to go higher and longer than anyone is so far talking about, certainly more than 5%, probably 5.5% to 6%, because of these embedded inflation prices that just won't come out." And then the idea that, we're going to start cutting rates in October.
Yeah.
It's such wishful, fanciful thinking. Again,
it's all
because
hope.
of all the 530 things I've talked about.
Yeah.
And so therefore, technically now, if we had our technical hats on here, we're certainly going to retest the 3,800 level. That's the first, support. You look at the 50-day level, the 100-day level, the 200-day level, and the algos work on the way down as well as algos work on the way up. So every algo is programmed, particularly if you're a momentum hedge fund, that as soon as you break the 20-day, you take 20% off, and that's what we saw, in the last couple of days. And we go 50%. You take 50% off, because let's face it, there's some people who haven't made money in the market in over a year, and finally all of a sudden, God, if you just bought Tesla, for crying out loud, you're up 67%. You're going to protect those. The profits. When you've been up for 12 years in a row, you get a little complacent, but you get the snot beat out of you for 9 to 12 months. And boy, you up 6% or 7%. And remember, value stocks were only up like 4%. Growth stocks were up 9% in January. You're going to protect those things, and the way that the computers do it is they put a sell stop underneath it, and it's a moving sell stop. So if the price keeps going up, the sell stop keeps going, and at some point in time, bing, and that's when you see that waterfall, and that's what we saw today. So as an investor, I'm going to assume in the larger indexes that, particularly S&P 500 and the QQQs, et cetera, that they're going to test the 20-day. Well, it lost. Now they're going to go test the 50-day and see how that works. And if that doesn't, they go to 100-day, et cetera. And then they got to come up with a new narrative, Todd, because the narrative, that's what that's what just gets me. The narrative 3 weeks ago was end in June at the most, cut in October. In 3 weeks, it went from now, we're not going to stop cutting. And the only way we're going to stop cutting is if we get to 2%. And we can't change the goalposts. No, we're not saying that there's a 3% inflation world. That's not our mandate, right? So we'll be doing this. If you're at home listening, I'm waving my hands like I'm a hula dancer. We're in this range, and we're going to be in this range till something breaks. Either, we get a serious financial, recession, economic recession, and then earnings, typically go down about 26% EPS, and that brings stocks down. But remember, the bond market today, I bought 2-year bonds, treasury notes, for basically 5% yield that I locked in for 2 years.
They're at 4.7%, and you have the 10-year at 3.9. You have an 80 basis point inversion right now, which is typically, history has shown us that we are in a recession, but we're not. There's every strategist, every economist, they're doing the same thing. They're banging their heads against the wall, wondering how is it that we're in a recession when you have people that continue to. Well, it seems like they're spending money. At least we saw it in the travel and leisure stocks today. You saw them up. But you have people that all these jobs are being created, and then you have obviously pressure on wages, and we'll see what happens. So, Toby, let me ask you a question. On the geopolitical side, though, we did get some things going on over the weekend. You have the president in Poland today. He did make the surprise stop in Ukraine, and then you had Putin come out, and he's been saber rattling, saying he's going to nuke the world, blah blah blah, all this stuff. So with that, I didn't hear a lot from Wall Street, from the Wall Street media saying that that was actually a risk that traders were taking into account. Do you think that is a worry for Wall Street right now?
Well, the Wall Street term is tail risk. In other words, stuff that would happen, negative stuff that would happen that nobody could foresee. From my years at Fox News, and particularly in the green room with ex-generals, and people who actually know this stuff as opposed to me, there still is this mutually assured destruction thing. And clearly, back channel wise, the world has let Mr. Putin know that there's 3 things that could happen if you were to attack outside of Ukraine or last much longer in Ukraine. All of them are bad. You tell us which one of these 3 things, the worst, you want to have happen to you. but for instance, this idea of some tactical nuclear bomb. Listen, we have, I don't know, 565 nuclear missiles. 300 of them are sitting in Germany. They can get to Moscow in 13 minutes. So that's not a realistic situation. And they would storm. As safe as Putin is with his bomb-proof trucks and his bomb-proof everything, he would be melted down. But it's more I think, Todd. I think it's more the issue of how many balls can we juggle at the same time. And we now have, China looking at supplying weapons and ammunition to Russia. The Chinese-Russian axis is becoming more and more of a reality. And again, we decided we were going to onshore all our Walmart stuff. So now my cool, workout shirt cost me $4 versus like the $20 for the Under Armour one, right? But
you look sharp.
Yeah, thank you. That's inflationary too. I mean, we're missing the point, that if we screw the pooch on the bond market, those rates go sky high. People say, I don't want it. And you have all the central banks now taking liquidity out, all the major ones, including the United States. And that is disinflationary. It takes time to work through the system. We all know that now. And that's why we're so, it's like a psychiatrist's couch here. We're like, oh, dear doctor, I'm so confused, help me understand this. And it's schizophrenic. On the first rate hike, remember the stocks went down that day and then they went up.
Right.
And we had the next, the big, another one on a Friday or on a Thursday, stocks go up and then down. Then last week, finally, when we got some real numbers on what actual CPI and jobs were, that's when we got the no landing concept. And as long as the no concept is the concept du jour, then that's where I think we stay in this trading range. And also, I would add, and Mike Wilson has made the point, and I've made the point, and other people have, when we got the bottom, and you call it either October or in June of last year, the forward earnings per share EPS multiple was about 14, which is below historic numbers in the last 30 years. So stocks were cheap.
That's right.
A week ago, it was 8.5 times.
Yeah.
Excuse me, 18.5 times.
18.5.
And that's stocks are expensive. So, this all made sense. This is your typical, just to the moon, quick bottom, hit the top, run out of gas, repeat. Now, on the other hand, as I say, there, who's that guy, Jim Cramer? Something says there's a bull market somewhere. I'm going to find it for you. There are bull markets for sectors of stocks that have secular, non-secular, tails, power tails behind them. Let me try that again. And hey, look at Lockheed Martin today. Look at Raytheon. Defense. Japan just said we're going to spend $3 trillion on defense. We haven't spent $3 trillion in the last 65 years. Right. That's a big transformation in spending. On travel, as you mentioned, people have said, again, in the weirdness of the post-pandemic world, I don't need any more stuff. I got more stuff. I'm throwing stuff out. You should see we have like a day once a month out here where you get to put your stuff out there. And it looks like the world's greatest thrift store out there. I mean, you were like, I don't know why I bought 3 other beds and 2 other, all this stuff. So, but yet, what does everybody, in affluent America want to do? Get the hell out of Dodge. Let's go somewhere. Let's go travel. Let's go see the kids. Let's go see mom and dad, yada, yada, yada. And that makes sense. And, airlines are cheap. I think Delta's cheap. I'm a little cursed on Southwest since I've been knocked off 3 times. But if there's most places in the United States, if you want to go anywhere, you got to go on Southwest. So the hotels are doing, and then China reopening finally. We own some Chinese hotel companies, but they're running at 0% occupancy that are now at 95.5 occupancy. Starbucks over there big time. Their own Lincoln. China stocks are cheap. So you have to look around the world and see where growth is happening. The biggest problem we have around the world is everybody I know over 60 years old is retired. The boomers leaving during that pandemic, we call it Fido, fuck it, get me out of here, right? I'm not, I'm done. And China's got the oldest population in the world. There's some big structural issues that the post-pandemic world accelerated. No one needs a new iPhone. No one needs a new laptop. No one needs a new modem.
You're right. Well, in the short term, I would say tomorrow we may have additional selling pressure. The Fed meeting minutes come out tomorrow. And we knew that there was not a consensus on the 25 BIP hike in the last meeting. We knew there was some calls for a 50 basis point rate hike. So we're going to read a little bit more into that. We'll hear a little bit more of the details of that meeting that took place, and that could then help accelerate the selling, at least in the afternoon tomorrow. But obviously, time would tell. But I mean, there really is not a key metric that's coming out, or even an earnings report that get move the needle. So it's really everybody's going to be relying on those 10 minutes tomorrow.
Todd, you're right, and I mean, just common sense. 517,000 jobs created. We've raised rates the fastest since 1980, and we're creating more jobs, in 1 month than we did in 3 months. The no landing. I wish I would have invented that, because I've been saying it. I just haven't had a cute saying for it. There is, when you take. People still have to rent houses, okay? Rents are coming down, but it's a 1 year lag. So even if we're dead right about everything on terms of the disinflationary stuff, it doesn't show up. And the Fed would rather over tighten, they just won't say it, than under tighten it, because history will say they were big wimp pussies who didn't do what Volcker knew he had to do. And King Volcker killed inflation, and he's a hero. And Jay Powell does not want to be the Arthur Burns, the guy who cut rates too fast. Inflation roared back. He got fired, and in shame. I could make a very good argument that 4,100 is a high this year, 3,600 is the floor, and we're going to bounce up and down on that until the glorious day that the Fed.
Well, let's hope going with that it's not a crash landing. So we want to make sure that's not the case.
Remember the crash, the great financial crisis had real problems. One day, I'll talk about when I was outside the room at the Senate and watched those guys come out after they were told that if you don't pass that TARP thing on Monday, people are not going to be able to get cash out of their ATM. Do you hear me, Buster?
Right.
And that was a whole different thing. And remember, most of the people who owned all those crappy mortgage paper, most of it were European banks. We bailed out the European banks because they operated at 50 to 70, 100 to 1 leverage. The United States banks on a net basis weren't, nearly that troubled. But if we didn't bail those bastards out of the French, bank system, the whole thing would have come down. So we're not close.
Yeah, we're not even there, and that is definitely a topic for another time. So we'll definitely want to table that. So listen, let's leave it there, Toby, because I know we're going to be talking more about this later in the week, and I'm sure we're going to have a lot more market action. The volatility is here to stay with the VIX at 23, and I know we'll be able to get into it a little bit further.
VIX 23, that's what gets me. It used to be VIX 35 or 40.
But it's higher than it has been, though.
That's true on a relative basis.
Right. That's the scary part. So
Right.
there's going to be some volatility. We just have to see if it sticks. But
All right,
but tomorrow will be one of those
Look at
days.
our energy tankers up today. We're just looking again at bulk shippers because the rates are starting to go up. There are ways to make money here. And oh, by the way, 5% yield and not on preferred on U.S. Treasury stuff, 4.8, but on a compounded basis, reinvested, it's more than 5%. And you're doing nothing, and it's risk-free. People have been, for the last 12 years, free money made everybody, a FOMO investor. 5%, if inflation's coming down and you reinvest, you're not losing money.
Yeah, and that's an audience. If you want more information from Toby, he's got so much to say. Go to transformityresearch.com. You can sign up with him right there and get all of this knowledge and then some. And I know that a lot of the audience is already signed up with you, Toby. I know they're already. We see the emails, so they're definitely getting a lot of value out of it. So all right, so we're going to leave it there. So on behalf of Tobin Smith, I am Todd Schoenberger. Thank you again for joining us today for Buy, Hold, Sell Special Report, Markets in Turmoil. We will see you later on this week, hopefully with some better news. Take care.
All right, ciao.
Buy, hold, sell, brought to you by CrossCheck Management. Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember.
Oh, God.
Yeah, well, that does. I want you to, oh, my God. Fast-paced, no, oh, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
from Bigwig Studios. From the Bigwig Media Studio.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.